Hi, everybody. This is Dr. Gregory, and we are in Chapter 12. We're going to be looking at complex fraud and financial crimes. So looking at this, we are going to cover some different topics such as different types of fraudsters, collusion, asset forfeiture and seizure, which was something I was very much involved in with the U.S. Marshal Service, miscellaneous complex frauds, U.S. banks and international money, and how money moves, and then some other complex frauds. So when we're thinking about fraudsters, we really throw them into two buckets. One is the situational fraudster, and the other is the predator. Now, the situational fraudster becomes a fraudster because of the situation lends itself to be. For example, they are to submit, or they have to take the bank deposit every day to the bank, and on a Friday they put the bank deposit in their purse or in their briefcase, and they forget to go to the bank, and then Monday they notice it. Tuesday, no one seems to care that the bank deposit wasn't made. No one's asking about it. So it could have just accidentally happened, but that's where they take advantage of that situation. So normally good law-abiding people, they're in a position of trust. No one's going to question them. But a situational fraudster, if given the opportunity, can move to a predator fraudster. And a predator fraudster is somebody that is a repeat offender. They target organizations or companies or businesses for specific schemes. I worked with a consulting firm that hired a payroll expert because we were putting in a brand new payroll system. This person came highly recommended, understood the payroll software upside down and inside out, set it up perfectly for us, and was running the organization for 6 months. We had this person on a 6-month temporary hire so that we could get the software running, get any kinks or hitches out of it, and have the payroll running smoothly. The person did a fabulous job. Now, they wanted me to go in and be trained as that person's backup, just in case that person was gone and I needed to run payroll. So the person was very open, talked to me, knew I didn't understand the system very well. So it seemed like that this person got away with creating ghost employees. Well, what that person didn't understand is my background as an auditor. I would always do edit checks on the printouts. And in the edit checks, I started noticing some employee names that I wasn't familiar with. And I went to the HR department, and they didn't know these people either. So we quickly figured out that this individual was setting up ghost employees, putting them in, creating fake payroll, deleting them, which really doesn't totally delete out of the system. We were able to recover a number of ghost employees, and was taking the checks and cashing the checks. So this person undoubtedly had done this before in other organizations. By the time we sat the individual down to talk to them, they terminated their employment. So they usually will be a person who really understands maybe a piece of software or a process, and they use that scheme from company to company, and it's deliberate. They know what they're doing and they go and do it. They're also in a position of trust. Remember, this person to us was an expert in the system, so we had no reason to mistrust or not put our faith into that person. And they're less likely to be a leader, because if they're a leader, then they may be in the spotlight. So they will often take positions probably lower than what we would expect them to take. So they blend in and wouldn't be seen. Now, collusion is when two or more come together to form a scheme. and it can cross positions, departments, organizations, jurisdictions, or companies. And there's three different types. One is the employee vendor supplier. So the employee colludes with the vendor supplier to maybe let them know that a bidding is coming up for a particular contract and can help them get favorable contract awards. Employee in the same company, but in different departments. The situation where you may have an employee putting in a false pay raise in the payroll system to another employee. That employee then splits the extra money and gives it back to the employee who put in the false hours or false values. And then you can have employee of different companies. Maybe the accounts payable of one company sends overpayments to another company. The accounts receivable person of that company takes that check, codes against whatever payment that is owed from the accounts payable, and then splits the overpayment back to the other person. So it can happen in a number of different ways. Here's a couple of examples that I wanted to give you. Legal and illegal activities. There could be collusion between within a company when you have commingling of legal and illegal activities. For example, I worked on a case with a bridal shop, and the bridal shop was actually running drug money through the bridal shop as fake sales. And then they were laundering the money through the bridal shop and then taking the money back out. So they laundered the money through a legitimate business in order to make the money from the illegal transactions become legitimate. Now, you can find illegal activities such as sales by using what I call the reverse income statement. So you match all of your expenses, and in this case, it was bridal inventory and some other things, back to the sales, and then you would try to find out where the difference of the money running through the sales wasn't being recorded as part of an expense. Now, the problem with collusion is somebody's always going to break. And the larger your circle of colluders is, basically the higher the risk that someone is going to break within that circle. They're either going to become more greedy and they'll want a larger share of the pie, or in the case of an investigation, colluders are often likely to break between themselves, which leads us to the old analogy that there is no honor amongst thieves. Now, some complex frauds and financial crimes have to do with organized crime, such as the Hells Angels, Mongols, murder for hire, drugs, prostitution. So you could have crimes going on in legitimate organizations. So you have a legitimate organization, and yes, the Hells Angels is a legitimate organization, but they have illegal activities going on, such as the drugs, prostitution, murder for hire. Mafia still exists. There are supposedly 5 remaining families in the New York Mafia, and the Colombo family is one of those 5 families. So I wanted to give you the Mafia family tree. Here we had Andrew Russo, who's the boss of the Colombo family. Then we had the consigliere, the underboss, and then down in the organization chart are the capos. So these are the mafia leaders that we've seen up to, this is as of 2021. And I'm sure that these families are still in business, conducting illegal activities, usually under the guise of a legal business. Drug trafficking. One of the big ones that came up was Pablo Escobar, who was with the Medellin cartel. Colombian drugs, mainly cocaine, and he was killed in 1993 trying to elude capture. A new one that's come out since 9/11, and even though 9/11 is 22 years old or 21 years old, it still is very present today, is terrorist financing, domestic and international. So people like Timothy McVeigh, who received money and used money for domestic terrorism. There's also state sponsorship of terrorists, where we find those in Iran and Syria and North Korea. Here's an example where Osama bin Laden funneled money through legitimate businesses and used that revenue for terrorist financing. And then we have charities that funnel money into terrorism. So you always have to make sure that when you are donating to a charity, you really understand what that charity is doing and make sure that the money, and in this case, a charity which supposedly assisted orphans and had offices in Jerusalem, was accused of funneling money for Hamas, for tax offenses, and in money laundering. Now, money laundering is just, it's 3 steps. It's we place the money into the legitimate financial system. So, for example, we have a nightclub, and that nightclub is a legitimate business. It serves drinks, it plays music, all of that, but it also might be a front for drug money. And so the drug money and the legitimate money all gets put into the system, into the financial system together, into the bank accounts. Because it's a nightclub, people aren't going to be so suspicious that it hits over maybe $10,000 in cash in a deposit, because nightclubs conduct business and earn a lot of money in a given night or on a given weekend. Once the money gets into the financial system, then they disguise the money source. They move it into different accounts, different amounts, different banks. So they start moving the money around into different accounts. And that's just to start making the trail harder to follow. It's really hard when you put that $10,000 in or $20,000 into the bank system, and then you start pushing the money out to different banking accounts. Then we integrate it back into the system. So we convert it back into a form that can be used. So we move that nightclub money into the accounts. We move it all through different accounts and washing it, we're layering it, making it more complex to find. And then we start taking the money out in the form of maybe Visa gift cards. So now it's in a totally different format. And then people go and use that to go buy assets that they use to continue the business with. When we're talking about money laundering and RICO, we often use the terms conspiracy. And conspiracy is just an agreement between individuals and companies that they are going to conspire or work together to create an illegal activity or to defraud. Now, co-conspirators have to have an agreement between them. That's one of the things that we try to do when we're investigating these types of crimes, is we have to find out, are these true co-conspirators, or are they just two people that are put together in a situation? So they have to have some kind of agreement between them that they are going to intentionally go do something, and they must act and or demonstrate the intention to commit a crime. Now, you don't have to commit the crime to be accused of conspiracy. You just have to demonstrate that you may or have the intention of committing the crime. So, for example, if you were going to conspire to steal money and put it into a third-party bank account, we would have to have some kind of intention there, either that they demonstrated by stealing the money and putting it into an account, Or maybe we find out that they started setting up all of these shell accounts in banks all of a sudden. And so that would lead us to the intention that they are going to commit this crime. And they have to mentally commit the crime through their state of mind. They have to be aware of what they're doing and their state of mind when they are formulating the conspiracy or when they are acting upon the conspiracy. So you must prove that there's the existence of the conspiracy, that they are willing participants, that the defendant had knowledge or the conspirators had knowledge of this crime, and that at least one overt act was completed. So they don't have to complete the whole process. They don't even have to commit the crime. But if they started putting steps in place to commit the crime, then that is the overt act that was completed. Here's another really quick illustration of money laundering. And the common scenario actually is to purchase homes during the integration and then buy more homes with excess cash and then sell homes when cash is needed. So what we often find in some drug cases is that they are tied to home purchases, multiple home purchases, because they have to do something with that money. And if they have a lot of money, the best thing they can do is put it into a home purchase. They may use a straw buyer or an unknowing participant, such as a family member who may not understand why they now are the considered owner of a home that they didn't purchase. But they have the dirty money that's acquired through the illegal activities, and they move the money into those financial institutions. And then they transfer it into the multiple bank accounts, they wire transfer it to offshore, and they continue to write checks from one account to another just to keep the money moving. And then they purchase the assets through integrating them back into the environment. They purchase financial instruments and investments. So they're turning money from one form into another form. And what we've seen is a lot of drug money goes into purchasing houses. And in one instance, the fraudster was asked, why do you have 7 homes? And the quick response was, well, if I have excess cash, I put it into the home. If I need cash, I'm short on cash for some reason, I just go out and sell a home. No one's going to ask me any questions. So they were using the homes as really little mini banking systems for them. Now, there's a lot of money laundering strategies and services. There is a black market money laundering, and for a fee, they will make your dirty money clean. They're a middleman. They go out and they gather the money from these other entities. They do all of the laundering, and then for a fee, they reintegrate that money back into and out of the financial institutions. And they use exchange dollars for pesos, exchange pesos for gift cards, and use gift cards to purchase. So we take the dirty money, we put it into the banking system, we transfer it down into Mexico or to another country. We convert the US money into pesos, pay out the pesos by purchasing gift cards, and then we use the gift cards to make purchases. Easy. International money movement is, accepting letters of credit that have been forged, federal wires, SWIFT money transfers. And note that we often will see bearer bonds in international money movement because bearer bonds are very tricky. The bond is valued and is validated by the bearer. So if someone steals a bearer bond from another person, that person now owns the bearer bond. And so we will see at times these bearer bonds being used to convert dirty money into clean money. We create a bond sell that bond back out to somebody. Now they own the clean laundered money. Now, when we're dealing with some of these money laundering strategies, we're often working with, the schemes are being done in other countries, or they're being converted into foreign currency. So oftentimes we have to get subpoenas for the data. And it can be difficult unless there is an agreement between foreign entities that they will cooperate, a cooperation agreement to help investigate these crimes. Now, there are lots of others in your text, so do go out and look at them. Some of them are very fascinating. I wanted to give you just a really quick picture of the black market peso exchange, because this is very common in drug money investigations, especially Mexican cartels. So they sell drugs to the Mexican drug trafficking organizations, sell drugs to the US for US dollars. Then they get all these US dollars and they then go to the black market peso exchanger, who's a peso broker. And for a fee, they take the US dollars, they place them in the US finance system, just like any money laundering. And then they identify exporters shipping goods to Mexico and Mexican importers purchasing those goods. Then the broker arranges payment for the dollars to US exporters for goods shipped into Mexico. Goods are shipped, who then sell the goods for pesos and reimburses the peso broker, who then pays the criminal group in pesos. So instead of using a financial institution, they don't do all of the laundering through the financial institution. They place it in a US financial institution, and then they do the layering through the purchase and sales of goods and products that are exchanging the US dollar for goods to the pesos, and then they redistribute the pesos back out. Very fascinating. Now, some complex frauds and financial crimes that we do work with is through the US Patriot Act that came as a response of 9/11. And it's the importation of more than $10,000 out of the country. So when you go flying and you fly into another country, you may be asked, are you carrying more than $10,000 worth of US dollars? If you are, then there could be some association or some suspicion as to why you're carrying so much money. Before 9/11, we didn't have that. And so people who were doing illegal activities were often taking suitcases full of money into other countries, putting that money into the banking systems over there so that they had these secreted or secured funds in another country that they could use. But because of the idea of terrorism coming into play, they put the threshold of $10,000 in there and said, you could be suspected of funding a terrorist organization because you were bringing so much cash on. Now, if you're doing it within the US, you could be subject to suspicious activity if transactions are made with more than $10,000 of coin and currency. So if you are depositing more than $10,000 into a bank account, even if it's legitimate, it's coin and currency though. It's not a check, it's not your payroll, but $10,000 in coin and currency, you may be subject to a SAR report. And a SAR report is just a report that the banks put out and they provide it to FinCEN, the Financial Crimes Enforcement Network, and they receive notices of these activities of large amounts of money being deposited into bank accounts, and they investigate it. We also have the same type of report that is filed by casinos when there's a transaction of more than $10,000. So if you're trying to launder your money through casinos, which is again another common method of money laundering. If you are using if you are going to the cashier booth with $10,000 or more, you will probably have a currency transaction report filed by the casino on you. Again, the FinCEN would receive the notice and investigate. Here's casino money laundering. I walk in with $15,000 of cash, and I go to the cashier and I say I want 15,000 in chips. So they give me 15,000 in chips. I've now converted illegal money to casino chips. I've now placed it. Now the next thing I do is I have to layer it. So I go to different tables, such as the roulette table, maybe craps, maybe Texas Hold'em, poker, and I gamble some. Not a lot, I just gamble a little. Then I take my chips and I go back to the cashier, a different cashier probably, and I cash those chips in for a check from the casino. I've now placed, layered, and now converted that illegal money from chips back to a check, and I'm out the door. This is why a CTR report would be filed if you did that over $10,000. Many times when we are investigating crimes, we look for one of two types of fraud, either mail fraud or wire fraud. Most crimes, if you look at a lot of these crimes that are going on, such as investment broker crimes, securities crimes, drug crimes, we usually do not convict the person of that crime. They usually will plead to a lesser crime, which is either mail fraud or wire fraud. And mail fraud is using the U.S. Postal Service to defraud. And they use it by mailing in a fraudulent tax return. If you mail a fraudulent tax return to the IRS, you're committing mail fraud because it's going through the U.S. Postal Service. Mailing a fraudulent investment statement, such as Rhonda Briard mailed fraudulent investment statements to her clients. That was a form of mail fraud. It must be part of the scheme. They must use the U.S. Postal Service, postal trucks, mailboxes to enact the scheme, but it doesn't have to be the main part of the scheme. As long as they drop that envelope into the post box, they've now committed mail fraud. Now, it doesn't mean that the fraudster has to be successful. Sometimes they are being watched. They use a postal mail service to send out all these fraudulent statements. We know that this person's creating these fraudulent statements. They come in with a subpoena and a warrant, and they take possession of those fraudulent statements before they go to the victims, and you can arrest the person at that point in time. So they don't have to be successful in order to be prosecuted. Wire fraud is the same thing as mail fraud, only it's using some type of media device. Phone, fax, email, social media. It just continues to grow. It used to be wire, radio, and television. Emailing a fraudulent tax return or an investment statement is wire fraud. And there are lots of financial crimes surrounding wire fraud, such as the Nigerian prince scheme, grandparent-grandchildren scheme, and love schemes. Now, the Foreign Corrupt Practices Act, or the FCPA, talks about paying bribes or creating favoritism in order to get something quicker, faster than the normal person. You pay a bribe, you get a contract. You pay a bribe, maybe you get a permit for building faster than others would. This type of bribery or favoritism in some countries, for example, China, is perfectly acceptable, but it is illegal for a US business person when they're doing business abroad, even if that country abroad considers it to be natural form of practice. Any payments to any foreign officials, like I said, getting a permit, maybe being able to purchase a building without going through all the normal processes and procedures. And it includes foreign firms and or any agents of foreign firms dealing with the US. Now, I was looking at the UK Bribery Act, and that's even stricter. It includes just offering the bribe, not even payment of the bribe. And it's just anything that provides an advantage. And it includes requesting this advantage, agreeing, or accepting the advantage. No money has to change hands. Just the act itself in the UK Bribery Act is enough. And it includes foreign public officials. I want to go over just a little bit about banking systems because banking systems have changed so much. You know, we use banks for everything. Housing funds, transmitting funds, loans, mortgages, securing property such as cars. They create checks, cashier's checks, debit cards, everything. There are commercial banks, savings and loans, offshore banks, and now we have private banks, private wealth banks. Chase has private wealth banks. Those banks are only for people, I believe, that have a continuous balance of at least $250,000 or more in their accounts can now be in a private wealth bank, as well as the US Federal Reserve. Now, these banking systems have tons of information: addresses, social security and tax ID numbers, personal information such as beneficiaries of accounts and account numbers. Now, fraudsters love using cashier's checks, money orders, and traveler's checks. You would think in today's day and age, the traveler's checks would not even be used, but they are. They're still a favorite of fraudsters. When it comes to moving the money, we have to think of the 3 V's: volume, velocity, and venue. Volume. Just think about on a daily basis the sheer amount of money moving all over the world. All over the world. In the US, there's over $40 trillion in circulation, currency in circulation. If we included cryptocurrency as part of that, there could be $1.3 quadrillion in circulation if we added cryptocurrency to it. Now, that number fluctuates because cryptocurrency fluctuates. The second V, velocity, the speed in which money moves instantaneously. Have you ever transferred money from your savings account to your checking account using your online banking system? Poof, done. Within seconds, that money is over there and you can start using it. So money moves instantaneously now. Where back in the day, you had to write a check, you had to put the check in the bank. The bank usually, it was held for a few days and it went to the Federal Reserve. And if it was a good check, then you got your money moved. So oftentimes there was delays in when money was available. We can see that also with credit cards, bank credit cards. I want to get money out of my bank account. Poof, there it is, instantaneous. Now, the third V, the venue, is who controls the money? Well, it may be in the bank. You go to your bank machine, your ATM, you go into the bank itself and conduct business. You can conduct business on your laptop. You can conduct business on your iPhone with an app. You have a crypto wallet, and you can conduct that business anywhere in the world. If I need to move money and I'm in another country, it's just simply getting on my app, just like this, and moving that money. So I don't have to be in the same place where my money is anymore. A few other complex frauds that we're going to look at is tax evasion and tax fraud. Now, remember, there's a difference between tax evasion and tax avoidance. Avoidance is legal. Tax avoidance is the use of deductions, itemized deductions, inheritance, shelters. Those are safe havens to avoid paying taxes. Tax evasion is the deliberate attempt at either overstating expenses, understating revenue, providing false documentation, not paying, companies not paying like their business and occupation taxes. They charge the customer for the B&O tax and the sale, but they don't report it to the state or to the county, wherever their entity is. That's evasion. And it's more than just a simple error. It's the deliberate attempt of deceiving. Now, in bankruptcy fraud, the FBI usually investigates bankruptcy frauds, and the U.S. Attorney will prosecute bankruptcy frauds. This is something where we can't civilly prosecute bankruptcy. We have to go to the U.S. Attorney and say there's bankruptcy fraud going on. Bankruptcy usually falls into Chapter 7 liquidation or Chapter 11 restructuring. Oftentimes they will go into Chapter 11 restructuring for a period of time, and then after that, if they are not successful, they would go into Chapter 7 liquidation. Bankruptcy is used to avoid paying debts. So if you're fraudulently trying to declare bankruptcy in order to avoid paying legitimate debts, that's where the FBI will investigate and the U.S. Attorney prosecutes. But bankruptcy in and of itself is not a crime. People do it for a number of different reasons. But if you're doing it to avoid paying legitimate debt, then you can be prosecuted for that. We have Ponzi schemes. Bernie Madoff is going to be the textbook case for probably the next 50 years on Ponzi schemes. And it's just simply taking new money to pay off old money. We get a new investor in, they give us money, we use that money to pay the fake, phony, ghost investment earnings to the older investor. Now, Mr. Madoff, who died in 2021, was serving over 150 years. We knew he would never get out of prison. He would take money from the new investors to fake returns, investment returns on old investments. But there was never any investment. There was nothing. There was no investing going on. There was just money coming in to pay off old investors. Now, they have recovered approximately $65 billion to date. There are claims of $19 billion. And so far, there has been a distribution of $11.3 billion. So there are still claims that have been filed that still have to be adjudicated. Now, people are not going to get their investment back. They will get a partial back depending on the paperwork they kept throughout this Ponzi scheme. A little bit more on schemes. We've talked about the Ponzi scheme. Now, the pyramid scheme is based on the recruitment of members. We used to call them birthday party schemes, and they're other names now. I start the pyramid and I go out and get two people, recruit two people. This is my birthday. When we get to a certain level, it will be my birthday and I will collect some money. So the money goes into the pot, and then those two people have to go out and find more people, and those people have to go out and find more people. And so it creates this large base of people constantly coming into this pyramid scheme. And then there's that one person on the top. That one person on the top at some point in time says, I'm done, I want out. They take their money, they get out, and then now the pyramid continues to move up. Prime bank investments, it's a financial investment scheme. It's what's we call high yield investments, but those investments don't exist. Another kind of Ponzi scheme, but it claims that these investments are with prime banks, International Monetary Fund, the US Federal Reserve, and so they're high yield investments. Insider trading is when material non-public information is shared between two people for some advantage. We have various cases through the SEC.gov. Martha Stewart was accused of insider trading. She actually was convicted of lying to the FBI, but she was brought in on insider trading. And we see that many times, especially when we have very prominent investments going on, such as pharmaceuticals. If someone gets wind, someone's invested a lot of money into a pharmaceutical, and then they hear through insider trading, insider information, that the FDA is not going to approve that pharmaceutical product, and then all of a sudden the money comes out before that, that's suspicious enough to go in and investigate it. Then there's other that are noted in the text, and I just identified two: churning sales of excessive securities for commissions. You buy a simple insurance policy to an insurance company, the person churns the sale, meaning that they have probably added some features into that insurance policy that you didn't buy, but they added it to the policy. And since their bonus is based on the sale, they get an excessive amount of commissions. Okay, lots of cool information in here. If you have any questions, please post to the class questions, send me a note in Halo Messages, or you can make an appointment with me. So have a really great week, and I'll see you in the classroom.